जिगन श्वेतल बेन ने फोन करते
કરી દો
આવી
ના
આઈ થિંક
સર
સીજલ
સર હું અહીંયા જ છું
આવી ગયા
સર
ઓકે ઓકે
હા સર
શ્વેતલ મેડમ છે જ હા
હા હા ગુડ ઇવનિંગ ઓલ
Yeah.
સ્ટાર્ટ કરી દી
yes now we can start
યસ
so
Okay, has everybody's joined, I guess, now?
yeah
No, okay. So, good evening, everyone. It's my pleasure to welcome you all on behalf of AOP Gujarat for our monthly webinar series, that is the Expert Connect series. It is the episode 6 of this monthly webinar that we're having under the Presidential Action Plan of AOP Gujarat. And we are generally covering various topics related to academics till now. But today's episode is special. It is in association with the Academy of Pediatrics Gujarat Women's Wing. And we're having a very interesting non-academic topic that we're going to talk about today. The topic for today is Smart Startup, Investing for Doctors. So we all know that how important financial planning and wealth creation is for all of us working professionals. So I'd like to quote Bill Gates here. He had said that if you're born poor, it's not your fault. But if you die poor, then it's definitely your mistake. So we should all learn how to create wealth from our earnings and to have a better life ahead. So for this, we have with us renowned experts in the field, financial experts with us who are going to enlighten us, Mr. Prakash Lohana and Mr. Apoorva Vora, sir. Before we start our session, first of all, I'd like to welcome and invite Dr. Jagdish Kamar, sir, the President of Academy of Pediatrics Gujarat, to give his welcome address.
Hello. Good evening, seniors and friends. On the beautiful monsoon eve, I welcome you all for the another episode of the Expert Connect, our AOPG webinar series. On behalf of AOP Gujarat, I welcome President Dr. Khalatkar sir, President-elect Dr. Neelam Mohan, and Secretary General Sir Dr. Yogesh Bhai Parikh, also West Zone President Dr. Ramesh Bhai, and all the respected OBs and EBs of the Central IAP and all the respected OBs and EBs of the State IAP. I specially thanks the office bearers of State AOPG Women's Wing, that is Dr. Shwetal Ben, Dr. Snehal Ben, and Dr. Chiragi Ben. I welcome experts of today's topic, Smart Startup Investigation for the Doctors, Mr. Prakash Lohana sir and Mr. Apoorva Vora sir. And with this, I take the opportunity to announce two things about the AOPG program, the Presidential Action Program, rather one program. That is, I invite all of you, OBs and EBs and all the members of AOP Gujarat for the picnic of AOPG at the Sanku's Water Park on the date of 2nd and 3rd August. And at the last, I request all of you to consider a candidature of our own Dr. Samir Shah as a treasurer, Central IAP, and we all make sure that he will win and win with large margins. Thank you very much.
Thank you very much, sir. I would like now to welcome and invite our Central IIP Secretary General, Dr. Yogesh Parikh, sir, to say a few words. He has joined us today.
Thank you, Dr. Anjulika Madam. So, heartiest congratulations to Dr. Jagdish Kumar sir, Dr. Samir, and the whole team of the AOP Gujarat and the AOP Women's Wing, Dr. Shwetal Madam and all. So, best wishes for today's program. Please continue the program and best wishes to Dr. Samir also. Thank you.
Thank you very much, sir.
Thank you, sir. I would like to acknowledge the presence of all the dignitaries who have joined us today, Professor Singhavelu sir, Professor Devendra Sareen sir, and all the other seniors who have spent the time today to join our program. Welcome to all. I would like to now proceed and call upon Dr. Shwetal Parikh. She is the President of the Academy of Pediatrics Gujarat's Women's Wing, to give her welcome address.
Thank you so much, Dr. Angelica. At the outset, I would not like to spare some more time. Dear all, this is one of the best series where we connect to the experts, and today the topic, a non-academic but essential topic, like how to the financial management. And so that is really very much required when we go through our MBBS or the post medicine journey. This is never a part of our curriculum, but I always personally felt that this should be a part of our curriculum. But there is no age for learning and implementing. So this is one of the great thing which AOPG has done to invite Dr. Prakash Bhai and and Apoorva Bhai. Prakash Bhai, I know him since now I think Prakash Bhai 5 years. So I'm
Yes,
sure
ma'am.
you all will enjoy the session and there will be a lot of take home messages. So thank you so much, Samir Bhai and the team for organizing this. We look forward to have more fruitful session. Thank you.
Thank you, Dr. Shwetal. Now I'd like to welcome and invite Dr. Samir Shah. He's the Secretary of AOP Gujarat, and this program, this webinar series is his brainchild. So we'd like to know a few words about the concept of this Expert Connect program.
So, dear friends, very good evening. And it's really a great pleasure that not only the Gujarat people, but the outside Gujarat also now waiting for the Expert Connect every third Tuesday of the month. And that's what we have getting the publicity and also the importance of this program. Till now, since February, we able to complete the topic related to the adolescent health, ID chapter related topic, neurodevelopmental related neurology chapter, NNF chapter, and also intensive care chapter last month. And now with the women's wing, we take some Zara Hatke topic. It's not the related with the any academic topic, but it's ultimately all this academic require some financial support and financial outcomes. So for the support and outcomes, for ultimately everything is related with the commerce, and the Mr. Prakash Lohana is the best person to give us some beautiful insight along with the Apoorva Vora, sir, that ultimately how we really get the investment. And this investment, today's topic is not just related with this routine investment, but it is something related that what we are feeling something new, that is the smart startup investing for the doctors. So that is the what topic, what is there. And this is, so of course, not like the case-based discussion, but it will be the really, we all are the considered as a case in this. So we have to learn a lot with these things. And with this, I hand over again to the mic to the MOC for this conduction of this talk. Thank you.
Thank you, Dr. Samir Shah. So now without much ado, we'll right away proceed towards our program. For that, I would like to welcome my co-host, Dr. Jigen Shah, to take care of the further proceedings. He is going to welcome the speakers for today and introduce them.
Thank you, Angelica ma'am. Thank you for the opportunity. Thank you, Samir bhai, and all other dignitaries. Without wasting time, I am introducing my faculties straight away. Dr. Prakash Lohana, Mr. Prakash Lohana. We all know him as a doctor because he's so much attached with doctors that I think 200 to 250 doctors of Vadodara are directly or indirectly attached with him. So he is the founder and MD of the Ascent Financial Solutions. Has experience over 22 years in financial planning and private wealth management. His turnover is more than 1,000 crore approximately. I'm introducing another speaker. He's Apoorva Vora. He's founder and CEO of Finolutions and co-founder of Finvolve and Wheels 24. He has experience of more than 40 years and more than 29 years in financial services. He is also speakers at various forums of alternative investment, startup, and global investment. Straight away now, I request any of the speaker to start the session. We are very eager to learn from you, sir.
Thank you, Jigen Bhai, for such a nice introduction. And I would also like to thank entire Academy of Pediatricians Gujarat Women's Wing for inviting us on this program. I would first like to invite Apoorva Bhai to... Apoorva Bhai is a very, very well-known person in the industry of alternative investment fund. He has been associated with different mutual fund companies and different financial institutes over his career of 40 years and has a very good, excellent knowledge about startup investing, selecting the startups and everything related to startups and alternative investment funds. So I would request Apoorva Bhai to first take up the session and educate all of us on startups. And then I'll take up some brief points from the investor's point of view as I am a financial advisor who builds the portfolio of the investors' clients. So I'll definitely take up that entirely कि कैसे investors को investment करना चाहिए startups में. But for what is startup to how to select the startups, I would request Apoorva bhai to take the session. Apoorva bhai, you can take the session. You can unmute yourself and start the session. Thank you.
Thank you, Prakash bhai, and I would thank everyone who has organized this, the entire concept of doing something like this. And while this is not academic from a doctor's perspective in that sense, we will try to make it as academic as possible by keeping it purely knowledge session rather than talking anything specific otherwise. So that is one second. And the last thing before I actually move to the presentation part is that please do not wait for any questions towards the end. If you have any questions, feel free to interrupt in my flow, and I can be, I'll assure everyone that my flow will not get disturbed if you ask questions in between. It's good to keep it interactive. With that, let me, share the screen if I can. Just a second. I presume the screen is visible. Okay. So the topic we're keeping is very simple. I should have added a couple of things more, which is startups means what, why, and how. But let's first talk in terms of startups. And one more thing, I'm going to keep this presentation, rather this presentation is filled with a lot of data. I have a presumption that a lot of us, not all, but a lot of us may be new to the world of startups. Unless and until there is credible data in front of us, nobody is going to believe anything about startups. And I think academically, a very, very strong bunch of people like whom I'm addressing today, without data, there is no reason for me to present. So there is a data-filled presentation is all that I'm going to start as my first disclaimer. A lot of data. I would still request, and this is something which we always say, that please speak to your advisor before taking any kind of investment decisions. While this presentation is academic, and there are no references of specific product that I'm going to use for most often, I would still suggest that it is important that your wealth manager or an advisor understands the risk profile far better, and therefore that advice is very critical. Let's move very quickly to the company that I represent today in this presentation, Finvolve Ventures LLP. Very quickly, this is an entity which is a joint venture of two large players in their own way in financial markets. India Accelerator, which is an entity based out of Delhi. It's a startup accelerator in very simple terms. It's more like a startup university where a lot of startups get groomed. There are, at this point of time as we speak, there are 16 locations where this India Accelerator is present, including one outside of India. And there are reasons for us to believe that we will touch a number of around 35 by end of this financial year. So it's expanding at a fairly decent speed. Finolutions, on the other hand, is a firm which I started about 12 years back. Essentially, this is a firm whose focus is to only evaluate and do research on complex investment products and alternate investments in general. Both of us together created the 50-50 joint venture and created Finvolve as an entity. Just a coincidence, we completed our 3 years of existence 3 days back. So Finvolve is relatively a new entity with respective strength coming from the parents, is what we would want to say. Essentially, this is brainchild of two of us, me and my other counterpart, Ashish Bhatia, who takes care of India Accelerator business. He's been a leader in startup ecosystem and building startups grounds up. I would take the credit of making this as a more of an asset class and integrating it with other investment avenues that you could be looking at. So essentially, this is what we do. In a nutshell, in just 3 years' time, the most important thing which I would want to highlight is that we have, just in about 3 years' time, we have become a multi-stage venture capital fund. Both the founders come with a very strong operating experience of running businesses and building businesses. But I think the most important pointer here on the screen is that we have the strongest pool of advisors and mentors who help startups groom the best. So just to give you some numbers, there are 1,601 alternative investment funds in India registered by SEBI as we speak. This data is on 30th of June. We probably are the ones who have the largest advisory board of any AR that exists in India. We have a 49-member team that advises on investments. Just a very brief about self. While it's already spoken about this. Just like so I've come with about 42 years of total work experience. I've been an investor in startups since about 2014-15 when this concept was absolutely new, and with making investments in US, Israel, and India over this long period of time, with already a couple of exits to my credit that I have had. The other important thing which I would want to quickly highlight is that I have been an early mover in too many things in my life. Was in software development from the year 1982 onwards, and worked in that space for a decade when softwares were completely new in India. IT revolution was just about beginning, and that's the time I started my career as a software developer. Developed the art of critical evaluations as part of my hobby, but that is something which happened way back, so let's move on. I was the first employee of the PMS industry in India when PMS started with the firm by name ASK Raymond James, which is now known as ASK PMS. And incidentally was the first batch of that employee at that point of time. Was among the first ones in the alternate investment industry to be working in the AR space. Very early on did a lot of pre-IPO cases and likewise. And eventually was amongst the first ones, actually the first from the wealth domain to operate out of Gift City and moved to Gift City lock, stock and barrel about 4 years back. This is just to give an idea that I've been an early mover in too many things, which is very critical when you look at startups as an asset class. Now let's talk about startups in brief. And this is a very favorite slide of mine. We all should not make this mistake. If we do not understand what is startup, our job is to understand, otherwise we will all end up making wrong guesses about the word startups. Right? Startups are everywhere. Any big brand or any good item that you see comprises of a lot of other ingredients, which could be startups. There is no large cap, there is no large company which can thrive without the support ecosystem of too many startups besides it. We many times say that this is like an aircraft carrier approach. If a large aircraft carrier is there in the sea or in an ocean, it is surrounded by too many things around, and everything is required for an aircraft carrier to be successful. Aircraft carrier can alone never sail very smoothly in the seas. Another very important thing that we say, whether I have a positive view on Shark Tank or not is secondary. But Shark Tank has made startups very popular and visible in households. In schools, there are functions that 3rd or the 4th standard students play the role of a Shark Tank now. And on a lighter note, we say that the time has come that all of us need to understand what is a startup. Whether we invest in startup or not, we need to understand what is a startup, because if we don't, our kids will teach us. So we have to take a call whether we are going to teach what is a startup to our kids or it is going to be reverse. Startups are inevitable now. Now, a little bit of a history, and I think this is something which is important for us to understand. If I look at the history of civilization, we were all hunters and gatherers some decades back. Then the entire economy, global economy, moved to agrarian. Then came mercantile era. Then came industrial era. And today we are at the cusp of a digital era. One thing which we always say is, there was never an expiry date of one era and the commencement date of one era. There were always overlaps. So when the agrarian era was coming to an end and mercantile era was just about beginning, you had someone like East India Company which decided to come down to India and do trade. And we all know what happened thereafter. Right? When mercantile era was coming to an end, visionaries like Tatas and Birlas were able to realize and visualize that we need to be in large industrial houses and become ourselves as large industrial houses, because the industrial era is here to stay now. All those people who were great visualizers in advance and who could play the entire cycle of a particular era very well are the ones who created maximum wealth. And they created maximum disruption, both. Today, when Mukesh Ambani says that data is next oil, we all know that we are living in a digital era. This is one another extraordinary period for maximum wealth creation if we are able to sort of capitalize on this at the right time. Right? And therefore, it is very important to understand which is the right time for someone to look at the next big wave. And that is where startup has a big role to play. Now, it is important to understand the kind of work which happens at central government level, state government level, local administration, and everyone around. So one factor which is not here, let me first speak about the central government push for startups. We all know that India is the third largest ecosystem for startup in the world. But I'll just give one simple example. 2 years back, when Nirmala Sitharamanji was making a budget speech in the parliament, the word startup was referred 21 times in her budget speech. Almost all of us will agree, 10, 15 years back, when the budget speech was being presented by finance ministers in India, the word agriculture used to appear 20 times, but no other word would come as many number of times. A massive shift has happened in India from the word agriculture, which is still important for India, to a startup economy, which has become very critical because the government understands that there is no way for this population you will be able to create formal jobs good enough for us to employ the youth of India. Startups are inevitable again. State government is doing some extraordinary work around promotions of startup. Prakash Bhai has been privy to a couple of such events which we would have organized. And one thing which is very clear, so I myself have been at least in doctors program, if I talk about, would have been at least about a dozen times in partnership with the government of Gujarat and education department, educating about startup ecosystem. This is the level of which startup penetration is happening everywhere across. I'm not going into too much of details, but we could take questions and talk about this a little later. But fundamentally, let's look at some basic numbers. We're the third largest ecosystem in the world. India, as of, there is one mistake in this slide, which I need to admit. The slide says data is on 25th of May. The actual data is as of yesterday. And I will correct this now. Right? So as of yesterday, we had 182,728 startups registered in India. Right? Okay. Other important thing is, a fairly good percentage of startups are the ones where you have women directors, which again is a very good sign, which not too many people believed till some time back. Again, one another important factor is that patented startups are a big necessity for anyone. And in India, unfortunately, this is the only unfortunate part, that there are only 3.26% of patented startups which exist today. This is one area where India will have to really do very good if we were to really thrive in the startup ecosystem. Couple of other important data sets. There are less than 8% of the startups which get funding other than friends and family. If friends and family invests in a startup, if I'm creating a startup of my own, and if Prakash Bhai is investing in the startup, that doesn't make me a good startup. And that doesn't make Prakash Bhai a good startup investor either. Because this is friendship. When he gives money to me, he might know as well that this money has gone down the drain. I might, take money because I need money for me to have an idea rolling. This doesn't mean anything. And therefore, we focus only on the startups which has got merit to take money from outside of friends and family. We run a startup fund. We would not want to fund any startup that comes to us. And therefore, this kind of filters are necessary. And I'll come to that also at the later stage in terms of how startups get filtered. One quick thing, for any economy to grow, you need one big catalyst for growth. I think internet economy or startups, whatever name that we use, the biggest catalyst for growth in India has been the low internet data. We low internet data cost. There is hardly any cost. None of us have really even bothered. What is the money that we are paying for internet? We are so used to using internet that we don't even realize what's the cost we are paying. But India by far is the cheapest amongst all international major countries, if we talk about. What has happened is that has made the penetration of startups in India very, very successful. Even a so-called illiterate country like India, their senior citizens in this country now are doing their day-to-day shopping, using Paytm very comfortably when they go out for buying their vegetables. They kill their time using YouTube, and there's nothing wrong in it being connected social media point of view also. The senior citizen, if they could embrace in a so-called illiterate economy, you need to give a lot of credit to the vision of the governments at that point of time to keep the data cost very low and ensure that internet penetration happens across India massively. On a much more lighter note, I would say this: the former chairman of Hindustan Unilever had once made a statement that you go to remotest of places in India, you will find two things. One, a Hanumanji temple, and second is the Hindustan Unilever product. We have now reached a stage where internet is everywhere across India. In Leh Ladakh, in the remotest of places, our military forces have the access to internet. Anywhere across in India. And we have never had any problem in internet. This has led to massive growth of internet economy, which resulted into the massive success of Jan Dhan Yojana. That led to a lot of financial inclusion. And all this made possible because of internet economy. One more thing, India has a young population. Very, very young population compared to elsewhere in the world. If Indian internet penetration is so great now, imagine that we are going to use this internet for many, many years, the same generation. So even if new generation is hooked up to internet or not, it doesn't make any difference because we have a good 30, 40 years visibility of great success story for startups in India, which gives even bigger confidence. However, there are always black linings in silver cloud. Let's look at one of those black linings first. Only 26% of Indians invest in Indian startups. 74% of the investment that invest in Indian startups are foreigners. Because we as Indians don't believe in Indian startups. Nothing wrong, and I'm not criticizing Indians for it. The same scenario was there for 15 years back in listed equities. 15 साल पहले listed equity में invest करना है, we would look at if FIIs are investing, then I will invest. If FIIs move out, then I will exit out. That was the philosophy. But then people started having maturity enough to understand whether FIIs come in or they go out. Indian economy is here to stay. And that belief led to a much stronger domestic inflow coming into the Indian listed equity markets. Exactly the same reason why we believe that the private equity market here now is going to do the repeat of it and is going to do the same. Slowly, steadily, we will start seeing the Indian startup ecosystem filled with Indian investors, is our belief. And once that happens, we have seen in the listed equity space how rock solid that industry becomes thereafter. If that is not good enough, let us look at some another data set. And look at the growth rate that India, US, and China has across investor counts, across the PE/VC funds, and angel investor growth, all put together. We are doing an amazingly great catch-up in all this. While our pockets are not as deep, we are not, even our VC funds and PE funds are not as rich as the global ones are. But these percentages are not a joke. This is very serious commitments for startups that we see now coming into India. Unfortunately, what happens is most of us will believe once we start looking at the track record of performances. Those who are able to visualize this and have appetite and have ability to invest and commit money, they tend to gain more, is obvious. Again, if this is not enough, look at the largest user base of most of the global internet companies. They are Indians. On a much more lighter note, I say that let's think about a scenario. If one of our neighboring country was not behaving properly with India, and Indian brand ambassador Mr. Modi goes to a beach, reads newspaper on a beach, and the tourism industry of the other country goes for a toss. That is what the power of India is today. If this user base is any indication, India cannot be taken very lightly in the internet economy. Okay. Now, very quickly and a little more academic. There are three types of private markets that we talk about: angel investing, VC funds, and PE funds. Where the problem lies, and because of which someone else has to pay the penalty. There is a saying which I quote many times over: poverty anywhere is a threat to prosperity everywhere. One bad news will impact too many things at a time. Let's read one very basic stuff. What is a private equity investment? Businesses with proven business margins, with proven cash margins, stable cash flows, and ability to service significant amount of debt is private equity. Generally, once the private equity stage is over, the company goes into a listed equity. Look at those companies like Paytm, like Zomato and all, when they came and hit the market, like Nykas of the world and all. When they came and hit the market, most of them were actually speaking not making great profits. They did not have even stable cash flows. Their ability to service debt was also question mark. If those companies come and hit the IPO market, which happened in late 2022 or 23, that led to a sentimental shift against the startup world. And people started believing that startups and the IPOs that come from startup world are better to be avoided because it is a recipe, a short recipe to lose money. Right? I will touch upon this a little later, not necessarily every time true, and we will take those examples as well. But we are going to focus more on this in the angel investing space. These are early businesses. Somebody has just set up the business sometime. Most often, they will be pre-revenue. The company is not making any revenue. And in some cases, there could be no customers also. Somebody is just designing something. You have to take a bet whether this company will become big or not and make a decision. I'll take one example. This was about 18 months back when there was a company from Bhopal whom we had called up in our Delhi office to come and meet us. The founder did not turn up on the day. We called the founder again and said that you didn't turn up. You were looking for fundraise. He said, yes, I'm looking for fundraise, but I don't want to travel to Delhi because you are the most polluted city in India and I don't want to die in Delhi. On that statement, we said, no worries. If you allow us, we will come down to Bhopal and meet you and then evaluate you. He said, okay, then come on a Saturday so that I don't waste my time in the weekdays. He said, no problem. Apparently a very snobbish founder. But we said, we can't have ego if somebody is doing a good job. Let's go and meet him there. So we went to Bhopal to meet him. To cut the long story short, what this man has made had just blown us up completely. This man has made India's first autonomous car, which runs on Bhopal roads. Most of the people in India do not even know that there is an Indian who has made an autonomous car which runs driverless on Bhopal roads. Exactly about a month back when I was in Austin, I had the luxury of sitting in a Waymo car, which is run by Google and Uber together. Absolutely driverless. And it was a fantastic experience of my lifetime. That experience I had 18 months prior in India as well, when I was sitting in this man's car. Interestingly enough, 3 years before this man was given a grant of $3.5 million by NVIDIA for doing an experimentation on this. The man in Bhopal who is doing this, and in India, most of the people do not know who this man is. NVIDIA knew, and NVIDIA gave the grant to him. Look at the background of this guy. This man is born in Chambal, had 13 school changes till his 12th standard. That man built this company called Swayat Robotics You can do a little YouTube on this. And that man has been able to convert a normal Bolero car into an autonomous car. He doesn't make cars. He converts your car into autonomous. This is the power of a remote location startup. Startups are not necessarily born in Bangalore. There is a joke. In Bangalore, one individual is a software guy. Two individuals are co-founders. That's the culture of Bangalore. Having said this, this is something which was remarkable. This company till today is not making any revenue, is not having any customer today. But if this company is investable enough, would somebody not take the risk of investing in this business? Absolutely, one should. Because sooner or later, somebody will buy this out. Because the guys like Google who has made the car is actually making a car. Tesla is making a car which could run autonomous someday. This man is converting a normal car. He's making an Android, which will convert your and my car into autonomous. And he's making it for whom? The old age Japanese who cannot drive the car could use his car or could use his software. This is the point. So even if it is early stage, it doesn't mean necessarily that it is a bad startup. Is it risky? Absolutely, yes, that's risky. So I'm nowhere saying angel investing is not risk. Now let's come to the risk part. I asked one question to a lot of people. If you had to buy a plant, which one will you buy? Most often the answer is you will buy a Series D, a plant called Series D. Because this is where you see fruits. Now I flip over this and ask a very simple question. If this plant was available to you for, say, $1,000, and if I ask this question that 5 years down the line, this plant will grow to how much? And what is the money you will make out of this plant after 5 years? Answer could be 2,000, 3,000, maybe 4,000. We as startup investors prefer that rather than buying a plant at that late stage, why don't we look at a packet of 100 seeds and pay 1,000 rupees for 100 seeds? If 5 seeds out of this reach the level of Series D, what's the money will I make? If I'm worried about the 95 seeds that did not make it, I should not invest in startups. But if I have a belief that 5% will become big, then you should invest in startups. And by the way, if as far as the funds are concerned, if funds are investing in startups, the average failure ratio is below 30%. So the track record is not as bad as what media speaks about. Right? That's one. Now, how do we invest in startups? So there are 3 ways in which investments can happen. First investment mode is you identify a fund manager who will build a portfolio for your startup investments. You commit 25 lakhs or 50 lakhs kind of an investment and let the fund manager build a portfolio of his own. Of course, he still is required to take your consent before putting your money into any business. And I'll come on that aspect also. So if I'm managing the fund, I take the money, I don't take the entire money upfront. If the money is 25 lakhs or 50 lakhs, we take the money over a 2-year period in installments. So 20% each over 5 installments every 6 months is when you fulfill your commitment to a startup fund. With that money, the money starts getting deployed in various startups. 2.5 years is a typical deployment period. 1 more year, 3.5 years. And then there is a slow and steady exit that start coming out of the portfolio. We keep returning back the money to the investors. Over a 7-year period, which is typically the tenure of the fund, the investors get back their money at a reasonably decent IRR, is how the startup funds typically work. Now, in this scenario, a fund is one where there is a designated fund manager with a reasonably decent understanding of startup ecosystem, supported with very, very strong mentors and advisory board and all. But the interesting thing is, before we make investment, any company that we invest in, any startup, we have to take the approval of an investor, whether we can transfer the part of this money to this particular startup or not. We need your consent. I'll give an example. We invested in one company based out of Bangalore by name Samosa Party. Simple, they make samosas. But if I look at that, Jubilant Foods also makes pizza. They don't make anything else great otherwise, right? But Domino's has become a big company. We feel, why can't even India have an Indian snack, which becomes very big? And they sell roughly, as we speak, about close to 1 lakh samosas a day today. They have 93 outlets and growing very, very strong. When we invested in this company, a lot of people came back and said, we don't want our money to go to this company because they also make non-veg samosas, which is against our religious belief. In that scenario, we will not put that investor's money in that startup. So in short, the investor has the final say. Another way of investing is syndicate, where we showcase startups to investors. It is just like equity broking house coming out with research report that you should buy ITC hotels. Now, whether to buy or not is investor's choice. Syndicate is something similar, where we keep showcasing startups to the investors. If you like the idea, you invest in multiples of 2.5 lakh rupees or minimum of 2.5 lakh rupees in any amount and start building your own startup portfolio your own way, is what we call syndicate. The third is something which is known as cap table, where usually the strategic investors or large financial investors come in. The first two options do not allow you to become a shareholder in that startup. The third one is becoming a shareholder in the startup. If you're investing in mutual funds, the mutual fund invests in Reliance Industries, you are not a shareholder in Reliance. This is what happened in fund and syndicate. But if you invest in via a stockbroker and invest into Reliance, you become, technically speaking, an investor in the Reliance books, and they recognize you as a shareholder. Cap table is exactly that. Typically, the minimum ticket size of a cap table per single investment ranges anywhere between 50 lakhs to a crore. So it is meant for larger investors. If suppose there is a medical device company and you believe that this medical device could be of great help to the entire fraternity and this can do well, and if you come in and invest into that and also help the startup do a little bit of mentoring on the startup founder, you could be a cap table investor with a little lesser amount also. But these are the three ways in which investments happen. Now, almost to the final part of the presentation, how do startups get selected? On an average, if I give our example, we get about roughly 600 pitch decks for us to evaluate every month. Of course, extremely difficult exercise to evaluate 600 pitch decks. Out of this, we do roughly about 60 Zoom calls every month because we need to sort of understand. So first is the theory of elimination. If most of the startups that we don't like, duplication, we feel that there is no great technology moat in this business, we might not invest. 60 Zoom calls will get further filtered down to about 12 to 15 one-on-one meetings that we do almost every month. Then there is an investment committee's validation which happens. And then a short list of 3 or 4 ideas is what we pick up for us to invest into 2 to 3 companies thereafter. Every month, this is the kind of funnel which we go through before a startup is selected and invested on behalf of an investor. Okay? Now, let me give a very simple, very quick story of Swiggy, which is just to give us an idea in terms of how do we evaluate companies and where we make mistakes, if at all. This is how the valuation of Swiggy changed in each and every round. And I would request a little careful attention to this slide. In February of 2015, Swiggy's valuation was 30 crores. Right? Today it is some 85,000 crores or whatever, but it was 30 crores at that time. Trust me, at that time, if they would have come and met me, I would have said, no ways. Who is going to buy food in this fashion? In just 4 months' time, it raised one more round of money, sizable enough. And the valuation was quoted at 320 crores. Somebody like us also would have said, Anap Shanap valuation koi diya ja raha hai. Somebody is mad, I don't want to give money. By December, it became 889 crores. In September of 16, it crossed the 1,000 crores mark, and it was at 1,370 crores in valuation. That is a time when people like us will think that we missed out a great opportunity because we were not able to spot it right. Now we should take this company. Whether we will invest or not, I don't know still. Right? Because this is hindsight. And in hindsight, everybody is very smart. The problem is having smartness beforehand. But what we are trying to say is, at every stage, there was an excuse that this is very costly valuation. At 30 crores, people said it is costly. At every stage, people kept on saying it is costly. The reality is, it came with an IPO. Right? After the IPO, the valuation has taken a little bit of a beating now. But think about if suppose somebody was an early stage investor, what percentage gain you were sitting on? I think this is one of the most remarkable slides to understand why early stage makes sense. Okay, let's look at the same thing slightly differently. Nowhere I'm saying that the risks were not high at that time. But if somebody would have invested in the early stage, compounded annually, the returns would have been 145%. If somebody would have invested before the IPO, just before the IPO, on the date of the IPO, somebody was sitting on 13% gain compounded annually. So I'm nowhere saying listed equities are bad. Listed equity has to be via mutual fund route more so, has to be the base of the portfolio. But if there are ideas and if somebody is willing to take good aggressive bet, there is a lot of moat in investing in these kind of businesses. Now, the question is it all about gas? Is it all about valuation? Let's look at this. Compounded annually, the revenue has grown by 117%. If the revenue growth is 117%, and if the growth trajectory is still high, why would someone not even pay high PE even today to buy some of these stocks? The learning is early investors tend to benefit more if you have ability to take that kind of risk. Right? I think this is where I would want to end. Thank you very much, and we are open for question and answer, and more so, I think I'll open it up for Prakash Bhai to ask real tough questions, and then sum it up his own way.
Prakash bhai, please unmute. Unmute, please unmute.
Now you able to do.
Yes. So it was a great understanding about the startups. I would request if any participants want to ask any questions to Apoorva sir. So you can ask the questions.
They can utilize the chat box also, or they can directly raise their hand and directly ask the question. We
Yes.
can ask, unmute them.
Apoorva bhai, there is a question minimum amount.
Yes. Okay. Okay. So SEBI regulation says that the minimum amount to invest in startup fund is 25 lakhs. That has to be the commitment, but it is a commitment. It is not to be given on day one to the fund. This is the money. So only when we are able to identify a good number of startups, we keep asking 20% each or whatever the proportion would be from the investors. So that is how it generally works. Prakash, again, you're on mute. Okay, so I can
unmute yourself.
I can yeah Prakash, please, sorry.
So sir, another question is how to identify and select the great startups.
So yes, that's a very tricky question, but let me try and attempt to give that answer to you. See, very frankly speaking, let me give our example. We as a fund are slightly overweight, if I use the word, on defense as a sector, and particularly in drone as a segment within defense. 3 years back when we started, we were very confident that the modern day warfare is very different than what we used to see earlier. Earlier, whosoever had better quality tanks and better army would win. Then came the era of F-16s and Rafales. Whosoever has a better aircraft will win. It was visible that the warfare was moving towards drone very quickly. And therefore, we started looking at drone much more actively thereafter. Now, when we were looking at these kind of drones, if there is any founder who will bring a drone in front of me and say, this is the kind of drone I'm making, I may not be able to understand the product. So let's understand there is a big difference between managing listed equity and the managing of private equity. Nothing against it. I have managed listed equity for a very long time in my life, right? So I come from listed equity background only essentially. But there is something which is very interesting, which we should know. In listed equity, there is one fund manager who will have a view on practically everything. He will have a view on economy. He will have a view on the market. He will have a view on banking, real estate, metals. And nobody has ever questioned, how can one person have a view on everything? But that's how listed equity works, because at the end of the day, you don't need to understand real estate as much or metal as a business. You need to understand balance sheet. And once you have the balance sheet understanding, you can understand any industry. In startups, we can't judge anything based on the balance sheet because the companies are new. So how do you judge a company? The company is judged by the end product that it is making, or the gaps in the market that we see, whether this product will really work or not. Now, if a drone comes to us, I may not be a subject expert on drone, but if we have a retired army chief on our advisory board, we have a couple of other people on our advisory board who come with army and navy background. And when they look at the product, they are the ones who will be looking at the product and doing test runs of those. They will be able to judge whether they will get defense orders or not. They can really help and mentor the startup founders and say, these are the changes that you need to make. That is what makes a difference. And therefore, we have to rely on a very large pool of people who will give us those kind of guidances. Right? To be honest enough, we have had several such cases. Just about some time back, we had to reach out to somebody. I mean, it's not fair for me to name, but during the COVID time, this gentleman was amongst the top 3 names in India. That caliber of people, if there is something that we need to check on medical side, and we go to those kind of people and say, sir, we need your help in terms of evaluating this product. When they give their comfort and say, this is a product which can really work very well with certain kind of hospitals, is the time you take a call, whether this really works and whether you want to invest into those startups or not. So when I said we get about 600 pitch decks on a monthly basis, we have access to the startup ecosystem exceedingly well. Whether it is IIT Chennai, IIT Mumbai, you name all those greatest of organizations, startups coming out of that, running all these kind of accelerators across various locations. Access to startup is never a challenge for us now. Then we need this kind of people to sort of identify which one is good. And that's what we build in our portfolios. Unfortunately, there's one more question, but there are no mutual funds which are in startup themes. So mutual funds are today, as on date, not allowed to invest in private markets.
So one more question is, where can we get list of details of startups?
So unfortunately, Prakash bhai, this is not. So, if you go to Startup India's website, you will possibly get all the registered startups' names and addresses. But that doesn't tell anything, whether it is an investable startup or not, whether it is raising money or not. There is no idea wherever. That all this becomes so easy. Let's understand one thing. When you look at this as a history of investing, any industry in the early days will have a lot of inefficiency. As it moves toward, as it starts moving towards efficiency, the risk gets lower, but the returns also start getting a little lower thereafter. Why do people have a belief that developed markets cannot give returns as much as developing markets? Because there is less scope for developed markets to grow thereafter. So here what we believe is that this is moving from inefficiency to efficiency now. In listed equities, you get all the balance sheet, all other details. In mutual funds, you get a lot of website which tells you everything. But you still need an advisor to tell you that what is good and what is not good, because data in front of you is still not adequate enough to bypass an advisor. Correct? All of us will agree, ChatGPT is no threat to your profession, at least not in the near term. Same logic applies. So if there is complete list of all 1,82,000 startups in front of you, it doesn't make you a good investor. It means nothing. There are a lot of filters that need to be applied. And then we feel it's a great idea. And then we go out and invest. It can still go wrong because there are risk factors associated with these kind of investments. But unfortunately, there is no laundry list.
Okay. So here I would like to make few points in favor of more understanding as an investment advisor, because I directly deal with the clients. So we need to understand few things, that when it comes to investing in startups, we cannot directly go and invest in startups. That can also happen, but that requires a huge amount. That is called cap table investing, where a startup would not entertain us unless we have a corpus of investment of 2 to 3 crores in one single startup. So the other better way for all of us is like alternative investment fund, which is SEBI registered, which is going to invest in startups. So Finvolve has that AIF alternative investment fund license. It periodically brings those alternative investment funds which are going to invest in startups, which are selected by the fund managers like Apoorva Bhai and his team. And we need to commit the funds there. Suppose we commit 25 lakhs today. We don't need to invest those 25 lakhs today. They will call for 5 lakhs rupees every 6 months in next 2.5 years. So in next 2.5 years, we will be investing 25 lakhs, and which will be invested by the Finvolve in different startups. And this is an alternative investment fund which is run by them. Most of us are investing in mutual funds. So mutual fund is a pool of money where we invest in a scheme, and then scheme experts choose the companies where they want to invest. So same thing is happening here in alternative investment fund. The difference is this is unlisted equity, and we can't say that when you want the money, the fund will be able to return you money. The fund will be able to return you money when they take the exit from the respective startups. Also, most of us are afraid of investing in startups today. We feel ke ye fund band ho gaya to kya hoga? How will the exit happen? So this recalls me when I started my career around 2000 2001 as an investment advisor, and started investing my clients' money in mutual funds in 2004. So at that time, when we went to investors with the HDFC or Reliance mutual fund, the first thing was कि ये HDFC mutual fund बंद हो गया तो पैसा कहाँ से आएगा? But if you see the people who invested in HDFC mutual fund schemes or Reliance mutual fund schemes, that point of time have created the largest wealth today. So their money is multiplied. Sometimes some of the investors have multiplied 100x also. So the same thing is today, I feel, happening for the startup investing. We all are afraid of it. So to give you few points which you should consider when you want to invest in startups, startup is definitely a risky investment. When you are going to invest in an AIF is going to invest in minimum 20 to 30 different companies, of which I would say if the startup is AIF is investing in 30 companies, 10 to 50, you can expect that 8 to 10 companies will close down. So you will lose 1x money that is invested into those companies. The remaining 20 companies, out of those 20 companies, 10 companies will give you average return of say 20, 25, 30%. And 8 to 10 companies will give you super return. They may multiply 5x, 10x, or maybe more than that. I have seen a startup fund exiting in a startup at 70x valuation. So overall, your fund return will be very great. Here, the risk is managed by diversifying to 20 to 30 or sometimes more than that startups. How much should you invest in startups? So out of your total portfolio, I would suggest that initially you should not commit more than 5% of your total financial investments. This is the principle that I follow for myself, and I also follow for my clients. That if you have a portfolio of say 5 crores, you can commit say 5% of that. Okay, 5% I'll invest in startups. So that way you can slowly grow. Once you start investing in startups, you will have a good experience, and then you can increase your exposure to startups. That is how you should think. Now, I would always again request, if any of the participants have any questions, please feel free to ask the questions. Which is safer preferred path for new investors, syndicate or captable? So definitely syndicate investing is the safer path, because your investment remains around 2.5 lakhs per startup. Whereas in captable, it will be in crores in one single startup. So basically, I suggest that you should go with syndicate or alternative investment fund, where even the investment per startup can come down to as low as 50,000 to 1 lakh rupees if it is diversifying to large number of startups. The next question is taxation and exit. So, sir, Apoorva sir, I would request that taxation and exit you can answer better, sir.
So it is very simple. The taxation, there is no difference as compared to the listed equity. It is long-term, short-term capital gains in the same fashion. Now, so that is one, except for the fact that if there are dividends, which is not expected out of startups, those dividends are treated here differently, but we don't expect startups to be paying dividends. So there's no point on that either. So taxation applies only on exit, and it is as per your listed equity only. So there is no disadvantage for a startup from a taxation point of view.
Can you, sir, explain how the exit happens?
Okay, so see, first of all, since you are investing in early stage, you have that much more number of rounds for you to possibly find out an exit, right? If I'm investing in late stage, the only thing that I will have to hope for is an IPO. If the IPO doesn't happen for whatever reason, the exit may get delayed perpetually or for a very, very long time. There are multiple ways in which exits can happen. First is there could be a company which will get acquired by a larger organization, right? That's something which is most common that we see in case of some of these startups. And that also, the moment you have a good institutional investor in the company, those kind of exits become a lot more easy. Right? So that is one. Second thing is, if the company grows beyond a couple of rounds and all, then an option which was not there available for most of the Indian companies till some time back, which is now there, is the possible listing on the SME exchange. That also is an option from an exit perspective. There are some companies which even before that could be equi-hired as well. Even if the company is not doing well, there is still a price tag to it. Company could be absorbed by someone else. A large part of the assets is given back. You may not necessarily make so much of money, but there is an exit window available there. One more example, if suppose there is somebody who is creating charging infrastructure for EVs, and then there is one large aggregator who comes in, some of the big corporate names, and say they want to buy out all this charging infrastructure, make their own branding around this, and make it really big pan-India. That's one more option which happens. So founders have those kind of options for them to sort of do these kind of exits. I'll give another classic example. We have one company in the medical tech space only. And that is a company which just about 2 months back has got an offer from Philips for them to, Philips is very keen on acquiring this. The founder believes that he has not still created enough value. And to give away to Philips today is little too early. But if Philips has entered today, I need to have something really strong with me immediately. Then he signs an MOU with Reliance, so the distribution of the product is taken care of by Reliance now. He's growing and said, maybe at 3 or 4x of this, I'll look at a buyer at that point of time. So every founder will have their own exit plans. Good part is most of the founders build businesses with an openness. I'm not saying with an inclination to exit out before IPO, but with an openness that if they want to exit out before, and if the value is decent enough, we should exit out of the company. One point which I would want to highlight is that this is exactly where the wealth creation has undergone a change from the traditional to a slightly non-traditional source. I'll give a simple example. Historically, we have said that the age-old Gujaratis and Marwadis have made best of wealth. and they understand the wealth management maximum. Let me just tell you, in last 10 years, wealth has been made much more by a young Bangalorean by creating and exiting out of a startup than traditional Gujaratis and Marwadis. And nothing wrong with any businesses. The reason why the wealth has not happened as much in Gujarat is that if I build business, my first mindset would be, why should I give away more than 10%, 15% to someone? I want money from someone, but I don't want that investor to ask me questions. We are slightly control freak people, is what I say. By no means I would want to give away 51% to anyone. Therefore, the business is limited to my ability to grow. As compared to that, the young Bangalorean took a call. Rather than slogging and taking 3 generations to reach to 100 crore valuation, build a business, even if you own 10% in the business, build it fast, 1,000 crores if there is a buyer, you will make your 100 crores at the age of 30, 35 and exit out. That's a philosophy where people have made a lot more money and wealth, both, in some of these geographies. Right or wrong is a subjective, but all that I'm trying to say is exit windows are available and smart founders always find out smart ways to exit out. Otherwise, the last option is your the 2 IPO routes, SME or the main board.
Sir, another question is, how is the scope to be a startup founder in India, and what help we get from government?
Great question. Absolutely great question. So let me give an example. If you have any idea which you believe is scalable enough, or if anybody in your network has a scalable idea and you believe that with you partnering it, you can give a good shape. First and foremost, if there is a little bit of technology involved in this, then there are government grants which are available to begin with. If you want to develop a product, and if there is no money to even develop the product, government grants go right from 5 lakhs to 6.5 lakhs to 10 lakhs, 20 lakhs. There are slabs and eligibility criteria. I can tell you one thing, the grant is a lot more easier for people to get than people from outside may think about. People may think that getting money from government is very difficult. It is absolutely not difficult if you have an idea which is reasonably scalable and if you can showcase or demonstrate something good. So that's usually the first level of funding that happens. Then there are a lot of other early stage incubators which are there, which help the startup with a little bit of funding and a lot of mentorship. We always say this to the founders, that having mentorship is always good, but having mentorship without any commitment of money from a mentor is not the best of the capital. To be honest enough, now I'm flipping this side and I'm sharing this. If you are a founder, and if I come and say that I can actually do a lot of advice to you, but if I'm not committing my money, that advice has lesser value. But if suppose somebody is in a position to scale it better, there are incubators which will help. The moment this idea takes a little better shape, there are a lot of accelerators which are there in the country. We, in one of the slides, saw that as well. There are about close to 1,000 odd incubators. There are about 200 odd accelerators which are there in the country. They are all there to sort of partner and help and scale this business up. I think it is not too difficult if your idea has a merit. And despite the fact that India is a capital-starved country, we have seen a lot of times that we also have to chase a good founder and say that, please accept our money. We want to invest in your business. Prakash Bhai knows of a couple of such instances where we have really worked very hard to convince the founder to please accept our money. Right? So if the idea is good enough, you have takers for it, and that should not be a challenge.
So, sir, I would suggest that can you tell few names that we have invested over last 3-4 years in startups? I can also tell, but I think you have the full story and you know the valuations that have grown. We have enjoyed those valuations, but you can tell it better.
So a couple of things. I'll not touch upon the 3 ideas which are at exit stage, because that will be, and we're making good multiplier out of those exits, but I don't think I want to give that as a benchmark. Let me talk about some of the companies which have brick by brick grown really very well. So the first investment that we had made, first ever, was an electric bike manufacturing company from Ahmedabad by name Matter Motor Works. They make EV bikes. And they make world's, or at least India's first, motorcycle, which has EV motorcycle, which has got foot gears. Typically, electric vehicles do not have gears. This is one which had made absolute macho feel for the youngster of today. An EV bike, which will only be good for the pocket money of the person. So the average cost of running this bike was brought down to almost like per kilometer about 25 paisa types, which was very interesting. The company had investments from Bearings Private Equity, Sanjeev Bikhchandani from the Info Edge, Shah Rukh Khan Family Office, Temasek from Singapore, latest investor being Japan Airlines. So some very high quality investors have invested in this. Right? When we met them for the first time, they were at 90 crores of valuation. Today, as we speak, the last round was at 1,500 crores of valuation, and it's been about a 4-year journey. So that's one of the company that we picked up very early on. Second investment that we had made, in my view, was equally interesting investment. Is a Bangalore-based entity by name Ethereal Machines. Very simple. They make 5-axis CNC machines, which does very high-end precision manufacturing. Those kind of manufacturing which will be used for defense, for aircraft, for very minute, extraordinary, high-quality product will be manufactured in those machines. Simple terms, old LCD booth kind of a shape. You put an aluminum brick in this, and it will make a wristwatch case. Tilting it, the aluminum brick again and again. Very speedy production will happen out of that. So manufacturing will be much faster. Far lesser wastages in this. Lot more cost efficient by all means. When we invested in, this company was not known to too many people. We made investments in the month of December. January 16, Narendra Modi releases, the Prime Minister's office released a video of 4 minutes and 30 seconds on startups in India. And Mr. Modi speaks about 4 path-breaking startups from India, which someone needs to take note of. This founder was featured one of them. And the founder had a 9-second space in that video for him to speak about his startups. Immediately after this, a very large fund by name Sikova approached the founder and said, we want to invest in your business. Right? Subsequent round, again, Sikova reached out and said, you are not taking money from anyone else. Till the IPO, we will keep investing in your business, and we want to make your business really flourish very well. I can't get into full details, but I will be disappointed if we make less than 5 times or 6 times the money in that business if we were to exit today already. So there are these ideas. For example, I spoke about Samosa Party, so let me give that reference. This was an investment that we made along with a very, very popular fund by name Kalari Capital, which was leading the round, and we co-invested along with Kalari Capital. Some of the most interesting bets have been in defense space, where when we would have invested in the business, their order book could have been about 4 to 5 crores. Today, that company in 1.5 years is sitting at about close to 300 crores of orders. Just imagine what could be, they're not in the fundraise game today, but the moment this company does fundraise, what kind of fundraise valuation could be. So these are some of the examples, but at the same time, let me highlight, we have so far made 41 investments in 3 years till now. We've had 1 failure so far, which is a complete write-off at this point of time, though while there is a court case going on the founder for fraudulent practices. Court cases in India do take their own time, so I don't want to comment on that, obviously. So far, the track record has been good, but we keep on telling this to the investor that don't go by the judgment that only 1 has failed out of 41. There are some failures which we don't know today, which could emerge out of our existing portfolio also. And therefore, it is important for us to have modest expectations, is what we would want to say. But yeah, I mean, it's so far has been an exemplary journey, yes.
Thank you, sir. Thank you very much. With this, I would like to hand over it to Jigen Bhai. You can take over, sir.
Any question? Any other question by anyone? So thank you so much. Thank you so much, Prakash Bhai and Apoorva sir, for lucid presentation and very informative talks.
Absolute pleasure, please.
Thank you. Thank you very much.
Final
Thank
few
you.
thoughts from Kunal Bhai available. So I request Dr. Samir sir to give thanks to all.
Right. So it's a really a great eye-opening uh, talk from the Apoorva Bhai. It's really a great thing that how we can really invest in the such type of the thing and take a risk. How much risk, what we want to take, all options are available. And being the investor point of view, the many good tips that is given by the Prakash Bhai is really very important, and we have to keep that thing also in the mind when we are investing. And at least what he says is the 5% of the your investment we can diversify in such type of the fund if you having a enough fund is available. So that's really a great thing. And my sincere thanks to the both of the speaker for really talking continuously, lucidly, with such an informative thing that will be really give us some more insightful for the better investment. So thanks a lot on behalf of the Academy of Pediatrics Gujarat and Women's Wing of the OP Gujarat to both of them. And my sincere thanks to both the MOCs for the excellent coordination, Dr. Angelika and Dr. Jigen for this presentation. Thanks a lot.
Thank you. Thank you.
And my sincere thanks to the our president, Dr. Jagdish Bhai, also for giving such an opportunity us for the every third Tuesday. And next Tuesday we are planning with the chapter of the allergy and immunology, chapter of the OP Gujarat, with a good innovative case-based discussion again. Thank you.
Thank you.
Good night.
Thank you.
Good night.
Nice.
Bye.
Exit क्या नहीं हो रहा?